Hi, everyone, and welcome to the Lido Tokenholder update call. Today, we'll walk through how the business has evolved over the last 3 months, where the protocol and its products are heading, and what's next for the LDO token. After that, we'll open the floor for questions. Before I introduce our speakers, let me share a bit about today's procedural details. We'll address your questions after the presentation, and we'll do our best to wrap up the whole call by 3 p.m. UTC. So you can post your questions on whichever platform you're watching this stream, Twitter, LinkedIn, or YouTube. But please note that our YouTube live chat doesn't currently support viewers sharing links. So if you have a question that includes a link, please post it on Twitter. And yeah, without further ado, let's get this call started. So welcome to the November Lido Poolside Tokenholder update. We're joined today by Vasily, so the Lido Labs Executive Director, Izzy, Chief of Staking at the Ecosystem Foundation, and Sam, Chief Legal and Operating Officer at Lido Labs. Vasily will take us through today's update, covering key product, business, and financial highlights. After the presentation, everyone will be available here for a Q&A, so you'll have a chance to ask your questions directly. And without further ado, let's start off with Vasily, so the floor is yours.
Hey, folks. I start with disclaimer. Happy to be on this call, and the material on it is for informational purposes only. It's not an investment, legal, or tax advice. This is like just the thoughts that I'm currently thinking and will express as a presenter, and they are subject to change without notice. To remind people who am I am Vasily, Executive Director of Lido Labs, co-founder of Lido. I used to be a CTO and a research lead before I became Executive Director around June this year, end of May. To remind what is Lido, what is Lido doing, why users are actually Lido. Lido is a DAO that maintains the liquid staking protocol, which is simple and secure way to stake Ether at low cost, low effort, very capital efficient. It can be used in DeFi for many purposes. It has best-in-class liquidity for unstaking and for trade in DeFi and on centralized exchanges. Lido governance structure is the Lido DAO which is a DAO that is governed by votes by LDO token holders. That set parameters and upgrade Lido liquid staking protocol, receives protocol revenue from it in the treasury, and pays and set goals to Lido Labs and similar foundations that I am an executive director of. And Lido Labs develops and maintains the code that is used for upgrades, for maintaining the protocol, for developing new features and stuff like that. Lido Labs is completely governed by Lido DAO, so it's what people call a BOC, the foundation that is by bylaws is required to listen to the Lido DAO token holder votes. I am the executive director of Lido Labs. Easy is chief of staking. Sam is chief legal officer and chief operating officer. Lido Labs measures success by making the best staking product on Ethereum while growing surplus long term for LDO holders. And the agenda for my update today is I'm going to update you on the market state, the financial update of Lido Labs and Lido DAO. I will touch on buybacks and proposal that had been posted today, overall strategic outlook, and then proceed to questions and answers. So the market state today is going through Q2 to Q3 since the last update. Is that Lido has lost a bit of a share, and mostly centralized exchanges, Coinbase, Binance, and Kraken, and not operators who work with big institutional centralized other holders are up in the share, and the rest of the market is down. One of the big reasons for that is the recent deleverage in October, when funds that were maintaining delta neutral position had reduced their position both on the Poolside and where they had liquid or illiquid staking exposure and stablecoin side. Over the course of the quarter, the share has got down, but in October we actually had a growth month. One growth month and a long string of decrease in the share, and what I hope and think is going to be the trend reversal. The staking market segments that I established on the last call, which is simple liquid staking, exchange staking, low risk staking, and APR maxes had changed a bit, not much, but like simple liquid staking, which is the category was dominant in, had gone down by about 1 percentage point. Exchange staking stayed more or less the same in share. Low risk staking, which is simple delegated staking, has gone up by 4% essentially, and the category of high risk, high API staking, like risk staking, leverage staking, and similar setups had shrunk a bit. The uncategorized and various different kinds of staking also gone down in share a bit. And our share by segment had also changed, but not by much. We have slight fluctuation in simple liquid staking. We are about the same in exchange staking. We have no beachhead in low risk staking yet, and APR maxes part we are slightly higher. On simple liquid staking side, Lido continues to lead the simple staking segment at 89% share. The core remains stable. The reduction in share is driven by withdrawals, not competitive loss in the segment. So We also have a bit of really good news here. One is that we released community staking module version 2 recently over the course of the quarter. It's not only a big improvement in terms of staking decentralization and allowing permissionless staking Lido. It's also better on the margin because average DAO take rate on community staking model is about 6% versus average take rate on created model, which is about 5%. And there had been just recently a proposal to transition the created model from a fixed operator feed model to a dynamic market-based routing system, starting with a small fee decrease for non-node operator, take decrease for most of the node operators, and expected impact of that is about 3,000 ETH yearly starting early next year. So we are working on making margin better. Exchange staking is more or less in the same state it was on the last update. It's very hard sector to get an improvement in, and we are looking for solutions here. But in general, we are listed on many centralized exchanges. stETH listed on many centralized exchanges and not listed in on a few big ones yet. So low risk staking we currently have no penetration in, but what we want to do here, like what we want to achieve here, is to enable growth in this segment by launching Lido V3 staked vaults, which is essentially allowing people to do delegated staking with instant liquidity on demand, which is improvement in utility versus just regular delegated staking. You can call it delegated staking plus because it allows not just liquidity, but also participation in DeFi and DeFi yields, participation in traditional finance by borrowing against the liquid part of your staked position on demand. And it takes very little time to switch from liquid to illiquid staking position compared to regular unstaking and restaking. It's about like a few seconds versus 2 months of waiting for withdrawal and deposit queues. We have early traction through discussions with custodians and leading node operators like Solstice, Chorus One, Stake, P2P, building staked vault powered products. The other interesting direction here is ETPs and ETFs. There is a filing for one egg staked ETF under review in US, as some of you are already aware. On APR market segment, we have a bit of a growth, which is we presented in this segment with leverage staking, collateral for restaking, and Lido Earn position. Lido Earn is has increased from like 21 million in January to 200 million in November after launching GGV and strategy vaults. And Lido DAO income uptick from Earn is about like 3 to 5% increase in revenue just on the like what is essentially early launch. The growth on Lido Earn at current time is like with launch of strategy is reignited again, but it used to stall. So we are working on execution here. And to tie it in overall financial update, a reminder how Lido staking works. I'm sorry for explaining some basic things about Lido over and over again, but this is a call for every audience that want to be present. So I'm going to say a lot of things that you can already know. The user who wants to participate in staking Ether can stake ETH with Lido protocol. This ETH is going to staking modules like curated module, simple DVT module, community staking module, which distribute these ETH to node operators who will validate the Ethereum protocol and receive staking rewards. These staking rewards are mostly directed to user in forms of staked Ether bases. But about 10% is like 10% exactly is a fee that goes to about 5% of it, like 5% point of it goes to Lido DAO, and about 5% point goes to node operators. A bit more now goes to Lido DAO with the community staking module version 2, so it's not just flat 5% as it used to be. This is on protocol side. On Lido Lab side, in 2025, our cost discipline is to spend about 31 million on base spending, which is like things that cannot be easily reduced, like easily cut on. Maintenance of protocol, development of the upgrades alongside with the Ethereum upgrades, operations, stuff like that. And up to 10-15% of treasury on growth and liquidity. So one is a target, the other is a cap, essentially. So how it looks, as you can see, third quarter had been a quarter in the red. So we have expenses are lower than net DAO revenue. We also have a bit of appreciation for assets that are held in treasury, like ETH price has increased, and compared with the first quarter, our treasury in USD equivalent is like more than twice bigger. And based on what we can say about Lido Labs, like budgetary projections until the end of the year, we are going to remain within the target budget. One thing that we did talk also on the last call and continue to work on is the buybacks and value accrual for LDO. And there is a posted proposal on the DAO forum. The gist is to automate buybacks and pair the both LDO with Rob staked ETH in liquidity position owned by Aragon Agent, improving LDO liquidity and removing partially LDO from circulation, and generate LP fees to the DAO. This buyback mechanism is proposed to trigger only over a certain price of ETH, which is proposed currently at 3,000, and estimated DAO revenue over $40 million over a year. And 50% of treasury inflows are going to be directed to this mechanism. In clips that will get, like, will do no more than 2% price impact. And there is a proposal of 10 million spent on annual cap on these buybacks. The discussion, link to discussion is on the screen in the QR code. You can easily find it in the research forum for the DAO. And I ask you to participate in discussion. And this is a proposal. This is not a like decision or done deal. The decision done deal is going to be on the finalized as governance vote. So if you think that the parameters can be made better, or there can be different models that you like more, please participate in the discussions. And one more thing that I wanted to start talking today is early teaser of what I think the Goose 3 submission should be this year. To remind, Goose is a set of goal set and exercise for Lido Labs by token holders. Anyone can propose a set of goals for Lido Labs that is going to be voted in by token holders, and Lido Labs is expected to execute on these goals, like toward these goals over the next year and in the next years. Traditionally, Lido Labs does, or someone else like that does some crafted proposal for Goose. And this is what I am thinking currently can be a good direction for Lido in 2026. The gist is how I'm thinking about it is that the Lido staking is in a pretty good place feature-wise. It's the mission for Lido is to make staking simple, secure, and decentralized. And with dual governance, with community staking module, feature-wise, we are pretty much very close to achieving this mission. Like it's going to be an evergreen thing to maintain it, but I don't think there are major features that can do more than moderate proof over decentralization or security or how simple it is to do staking. But we can expand the customer base, like the stake to different staking segments. We can support liquid staking with many different side products, and staking is going to remain the flagship product of Lido. We are going to work on staked vaults, modular staking infrastructure for introducing Lido V3 that is very good for channel partners like custodians, layer 2s, node operators, that to build custom staking returns product on staked liquidity. This is our breakthrough into low risk segment, and the target we think can be achieved is about 2 million ETH staked by the end 2026. And we can expand into ETFs and ETPs, and we can work on improving the economics of Lido staking by introducing validator market walnut that turns simple and allocation of stake that is like more or less flat currently within create module into a market-based system where DAO can set fee ceilings, operator can compete by performance, by decentralization, by and like the fee amount to get stake from the DAO. And our target here is to improve annual revenue by about 3,000 Ether. I think we will also need to expand beyond staking. We are living in the very interesting time for crypto, of time of adoption. We got from early adopters to early majority now. A lot of businesses, a lot of people are using blockchains for currently for stablecoin transfers, and like don't care about how or what products are built. They just like need working applications. And this is going to just increase the DeFi is going to be exposed to mid-space business, mid-space people, mid-space high net worth individuals and funds. And there needs to be more products that Lido can offer this real world economy than just staking. Right now, we have like one huge product, which is stETH, a seed for expansion in forms of V3 and staked vaults, and a small but very interesting direction form of liquid vaults in Lido Earn. And in 2026, I think we need to expand beyond that. So we have many lines of revenue as DAO, many products, and we innovate continuously, not on just on staking, but on DeFi and working with real world and mid space. From staking to DeFi gateway for real businesses. So in summary, we are executing plans. We want positive impact on market share in Q4 and early Q1 2026. There is a spending discipline in terms of having more revenue streams, more cost-efficient teams, and increasing margin. We are proposing to commit to value accrual to the token. At this moment, overall, over the course of the year, Lido is running in the red, like it doesn't have a positive surplus. But when this positive surplus is there, there should be a mechanism to utilize it for value accrual. This is my belief right now. And Lido is going multi-product with I think Lido should go multi-product with Go3 and move up the funnel closer to the customer. That's it. Thank you.
Great. Thank you for that. Appreciate the update and overview, and I think it's quite exciting for a lot of listeners and viewers. So from here, we're going to move on to the Q&A session. Quick reminder to our viewers and listeners, you can send in your questions on the platform where you're watching this stream, so on Twitter, on LinkedIn, or on YouTube. Please note that YouTube doesn't allow viewers to share links live in the chat, so if your question includes a link, please post it to Twitter. So yeah, starting off, in recent weeks, we've seen permissionless vault platforms like Morpho and Euler face major issues with unbacked vaults. In Lido V3, this is even more critical since permissionless vaults will directly impact the value of stETH. Are you completely confident that you can protect stETH's value when issuing tokens against these pools, and that your security measures will be fully sufficient? So this question is to Izzy.
Yeah, so I think there's a lot of different layers to this question. And so I'll start by doing like a brief summary of how stETH vaults work. So stETH vaults are essentially native staking vaults, if you want to think about them this way, that are collateralized and then allow stETH to be minted against them. So the underlying token is always ETH, and that underlying token is either staked or in the vault and basically like made available for like against the minted stETH. The second thing is that vaults operate using the concept of a reserve ratio. So that basically means that vaults will never have a one-to-one minting of stETH against the underlying ETH collateral. So there will always be some percentage of ETH in a vault that essentially cannot be minted as stETH. So all of these things come together into a risk framework. And the risk framework basically looks at a bunch of different things. Is the vault permissioned or permissionless? So for example, for permissionless vaults, there is a very aggressive risk reserve ratio, meaning that I think like a maximum of 50% of the vault's TVL can be minted as stETH. And the amount of stETH that can be minted in totality, in aggregate, by all of the permissionless vaults put together cannot exceed a certain safety threshold, which will start very small with the launch of Lido V3 and stETH vaults and steadily increase, but it's not going to be like the focus. And so you're also relying on the trusted and reputational element of identified professional operators to be able to do diligence on them and to appropriately set the different reserve ratios for the different vaults based on which node operators operate them, how many vaults node operators operate in total, what is the amount of stETH being operated by this node operator in general, so that you can calculate things like what might be the risk exposure from a catastrophic slashing perspective, if the entirety of the stake of a node operator was somehow slashed. On a second perspective, you look at like the likelihood of these events happening. So it's very, very unlikely that we'll see a catastrophic slashing. Like, it's never happened, and the risk model still takes a very, very conservative risk approach into account. And the third thing is basically the security kind of like focus or paranoia that pervades everything that Lido contributors do. I think right now the fifth audit from 3 different auditors on Lido V3 is being finished, and the last observations have come in, and they're being assessed by the team right now and figuring out what fixes need to be done, if any, what tests need to be done to check the fixes, and the reviews that will be done by the auditors afterwards. There is an internal security committee that basically reviews every piece of code and the totality of the code that Lido smart contracts are after every release, and thinks about things, from an aggregate perspective, and not only looking at the piecemeal releases. And security comes first. So actually, we had hoped to launch Lido V3, I think, like early autumn. Right now, we're looking at like a mid-December launch date, and that basically comes from this insistence that security is quintessential. Smart contract risk is like the biggest risk that we care about, and we're doing everything possible to make sure that all the bases are covered from that perspective.
Great, thanks. That was a very comprehensive answer. Next one up for Vasily. Do you have any plans to increase the low voting participation rate by incentivizing delegators? So Lido's own core vaults may have centralized governance, but Lido V3 shouldn't. Do you think the same?
So I'm not currently thinking about anything in this direction. Incentive, like we have some incentive programs for delegates, who can attract delegators. But I think that the right way to, what the right thing to focus on right now is the value accrual more than incentivizing participation. I didn't get the second part of the question and how it relates to participation in general. Permissionless part of Lido V3 vaults is not going to require any major governance decision or something. But any ties beyond permissionless with better terms and are going to be vetted by the DAO to not introduce any extra risk. They are essentially a way for us as a DAO to assess that there is not a lot of risk in correlating staking, that the node operator is not going to purposefully slash and stuff like that.
Great, thank you very much. And next one, I think, will be for Izzy again. So will Lido open its liquid staking services to other blockchains, for example, Hyperliquid or Solana? How can Lido perform and win?
So this is a great question. I think probably we get it every quarter. And the answer is, if you look back far enough, Lido was on multiple other chains. So, there was Lido on Solana, there was Lido on Polygon, even Polkadot and Kusama at some point. I think as we think about like what large institutional allocators want, the original thesis was that you want a basket of all of the large LSCs and you want a single provider, basically. And I think that thesis was correct, but it was probably made at the wrong time. The market hadn't settled yet around what the crypto majors were. The staking environment in general was very, very nascent. And the thing that it also didn't take into account is how differentiated. Sorry, there's a bit of feedback. How differentiated the different networks are from each other. So to a large extent, I would say that different networks and different protocols are almost more like different nations. There's a very large cultural element to being able to successfully launch a winning product on Solana, and it differs a lot from what it looks like on Ethereum. And as a single staking provider, I think it's much more difficult to be able to do that and do that well on every different venue. And the other thing that you face when you try to do that is essentially the fact that there are local players, if you want to think about it this way, whose sole purpose is to win that specific market. And they have tokens, and they will use all of their tokens to basically win that market, versus as a very large player, if you want to play in multiple different markets, you still have one token, and then you need to compete in multiple different venues with that one token, which drastically disadvantages you from an economic perspective. So to go back to like the original question, I think everything makes sense as long as we consider broadening the scope of where Lido is and what Lido does. But there's probably a little bit more settling to happen in the industry in general with regards to like what the proof of stake majors will be in a couple of years from now. The majority of staking revenues, I think, like are clearly still on Ethereum, and as we start to see more institutional adoption, I think it will have a clearer picture of where it might make sense to re-engage or engage for the first time, based on what the appetite there is for large capital asset demand.
Great, thank you. Okay, this is a question for Vasily, I think. So what are the highest impact growth items that are being worked on right now? What are the expectations in terms of growth resulting from these? And what are the resources that are being allocated to these respectively?
Yeah, I'm turning the mic on. So there are separate, like two big separate bets, I'd say, currently for high impact growth items. And one of them is staked vaults and Lido V3, which is a impact growth direction for expansion to low risk staking and working with channel partners. The other impact growth item that I have high hopes for is Lido Liquid Vaults and Earn, which are an further expansion into high APR market segment, essentially. Next year, based on like how market accept that and what we can actually get, we will double down on that. Maybe focus some resource and priority into working with the exchange trading products, and maybe like completely separate and different product that will come up over time. We are going to incubate smaller, like some form of startups for making the new products that are complementary to staking and to DeFi position of Lido in the industry. What are the resources that can that are being allocated to those respectively is on the vaults and Earn side. It's a smaller side currently. Most of the development and operational resources are on making the V3 launch safe and sound and successfully. But I think that over time, the share of resources that is like pushed on staking side and on complementary product side is going to be shift from staking to complementary products. That's it.
Awesome, thanks. Next up. So I think the next one would be for Izzy. I'll just wait for it to come up on screen. Okay, so yeah, if CSM is more profitable than the curated module, and it is obviously better for decentralization, what are the plans to increase CSM's share?
So there's like a lot to unpack here. Let's start with the first one. CSM is more profitable than the curated module. This is currently true on a per staking unit basis. So like ETH for ETH or validator for validator. But this is only as a result of the CSM v2 upgrade. So previously, CSM was not the most profitable module. And the reason for that is that basically the module was geared towards community stakers, like home stakers, and the module had a node operator fee that essentially like made it very, very, very profitable. But it didn't make sense from a scaling perspective. And so contributors spent a lot of time designing a very robust system around identifying community stakers. And that's basically what we call people that are staking from home, or at least, using like a virtual server if they can't stake from home, but are running their own validator and using a fractional bond in order to do so. So basically putting up a fraction of the total of the 32 ETH for a validator. And using that system of identifying these community stakers, and this is not like a KYC system, it's a system that combines various different aspects from KYC to on-chain activity to proof of how people have benefited over Ethereum and staking ecosystems to give these specific node operators better terms. And then at the same time, it makes the default or permissionless node operator terms still better than solo staking, but not as profitable as it previously was. So for these default node operators receive 3.5% of the staking rewards, and the DAO receives 6.5%. And that's how the 10% comes together. The next part of the question, I think, is if CSM is so much better for decentralization. So there's a really complex question here, which is are permissionless systems like more decentralized than distributed systems? And is there a balance between something being permissionless and something being well distributed and robust? And I think in general, what we see is in fully permissionless systems, they're actually not that decentralized because there's other aspects of decentralization that suffer as a result of this. Fully permissionless systems tend to be pretty centralized, and you will have a few node operators running the large bulwark of underlying stake. That's not to say that CSM isn't decentralized. It actually is pretty well decentralized and pretty distributed, but there are a few very large node operators running the majority of stake. The third is that there's an implication that CSM can scale to the size of the curated module, and basically it can't. Due to the fractional bonding requirements, it is really not possible, and there's not that many home stakers to essentially rely on to run that amount of stake. And the fourth part is, we identified that there's ways to make CSM more cost efficient from the DAO perspective and more profitable, and still make it make sense from both a home staker and a permissionless staker perspective. And the same kind of thinking is going into the restructuring basically of the curated module, whereby we're like looking at the node operator fees and we're instilling market-driven elements and competition around pricing for node operators. So the first step to that is what Vasily mentioned, which is that in December, there's a proposal to lower fees in the current curated module and use a primitive node operator type system like we had in CSM, building up to the middle of next year when we hope to be able to release the curated module v2, which will basically have like a built-in market mechanism and a ceiling on fees. And so we anticipate that the curated module from that point forward will be as profitable or more profitable than CSM.
Awesome. And here's a question. So where can we find what these segments mean? This might be taking us back to the simple staking segments and those that were being outlined, Vasily, in your presentation earlier.
Yeah, this is about segments. I proposed this market segmentation in the previous community call. The full answer is going to be there. In short, liquid staking, simple liquid staking is just liquid staking without any extra source or something. This is something like stETH by Lido, Rocket Pool, Stakewise, things like that. When you put ETH and receive liquid staking token return. High APR segment is anything when you want to milk more rewards from your staking, accepting more risk, like restaking when you accept the risk of like additional slashing or like multi-sig on top of multi-sig on your stake and stuff like that, or leverage staking when you also accepting the risk of borrow rates and liquidations and stuff like that. This also includes liquid vaults, where there is also some kind of like management risk and similar products. Low risk staking is simple delegated staking or like self staking, essentially, something that many big stakers do with the chosen node operator. Low risk staking is characterized usually by large staking positions and low fees on these large staking positions. So it's like on the lower side of the margin, but it's liquid, and this bugs a lot of people. And the final staking segment is staking exchanges, and this is like pretty self-explanatory. It's kind of people putting it on like on Binance, Coinbase, or something, and staking there, and it's also like a pretty big part of the staking. The final one is like everything else, and this includes unidentified staking positions and a bunch of like something smaller, like not falling into other categories, essentially. Mostly it's unidentified, like we couldn't analyze it.
And yeah, for listeners, we will publish a recap of the token holder call, so we can include a definition of these different sort of segments in there for you. So stay tuned. So the next question, I think this could probably go to Vasily again. What is the current DAO revenue? If buybacks are with Lido, or if and only if Lido revenue is above 40 million, is it even a chance to see these buybacks?
So the answer is like if it was deployed today, it would be working today. Essentially, ETH is over 3,500, and Lido, like annualized Lido revenue is about I think like $45 million or something like that in dollar terms. So it's something that is true today, but if ETH is about like sub 3,000, then it's probably not the time to do the buybacks, given the like costs and growth expenses and stuff like that.
Great, thank you very much. On to the next. Yeah, there we are. Oh, nice, perfect. Okay. Lido market share to 169%. Okay, maybe the next question we could pass on to Izzy. So how could ETH ETFs be beneficial to Lido? Maybe you could unpack sort of what a Lido staked ETH ETF would look like.
Yeah, absolutely. So for those that don't know, an ETF is an exchange traded fund. It is a subclass of a general class of products called exchange traded products. Sometimes you see them used interchangeably. Sometimes you see people say one is American and one's European, a bunch of different stuff like that. It's complicated financial terminology. We don't need to get into the details, but essentially these are packaged financial instruments that are made available via registered exchanges that people can use to buy and sell and trade assets in a regulated manner. So why is something like this beneficial for a decentralized and DeFi protocol like Lido? There's two reasons. One is that essentially it allows users that may not traditionally have access to native digital asset products. And they might not have access because there might be regulated organizations or institutions or companies. And basically they're not allowed to hold these assets. And so they need to rely on custodians that hold these assets, or they might not know how to do it, right? And so it's beyond kind of like their technical capabilities. So doing this basically allows Lido to reach new segments of customers and new addressable markets. From their perspective, even if they could hold digital assets, maybe they want to hold a traditional packaging of it for a variety of different reasons. But one might be that there's better tax benefits in doing so. Another might be that they're able to collateralize it and take a loan out against it, so they could essentially buy it, store it with their bank, who would custody it, and then be able to take a loan out against it. Whereas taking out a loan in DeFi might be more complicated from a tax or an accounting perspective. So really, it broadens not only the applicability of Lido products and stETH in particular to this different segment of customers, but it also broadens the use cases. And so it's very, very possible that we might even see digital asset treasuries that would actually have exposure to the same underlying product like stETH, both via a traditional packaged version, like an ETF or an ETP, and also via a on-chain native version, either by holding the asset directly or using it in DeFi, or having it and then using it in a product that's further up the value chain like GGV.
Great, thanks. Yeah, it was very clear. So yeah, as we talk about getting closer to end users, what sort of closer to user products are we potentially going to see in 2026?
Yeah, so for one thing that is, I expect with the hyperobligate to happen is we're going to see more of the Lido wallets and earn, like liquid wallets and earn, including other assets like stable coins and stuff. That's one direction. The other direction is working with channel partners like node operators and wallet crates and stuff like that on V3 adoption, which will allow them to keep the client who is taking with them, but also allow them to participate in DeFi and get the sweet DeFi yields, which is not as close to clients I get as a direct product, but it's pretty close. The other things can be there, but they are like on the more of the like not close to release now, not close to being used now, maybe in the ideation phase. So I'm not going to commit like to get them deployed, but we are also working on interfaces for integratable interfaces for DeFi for different kind of also like channel partners like custodians, banks, and stuff like that.
Great. This question, I think we could probably pass over to Izzy. So how will Lido compete with custodial staking going forward? So services like Coinbase, potentially different ETFs.
Yeah, that's a really good question. So I can give my personal kind of assessment or inkling of how the market is going to develop. So custodial staking is the immediate next step, and it makes the most sense. What I mean by that is that the I don't know what you want to call it, like friction, I guess, for entities that are already custodying ETH, for example, with Coinbase, to then go and use Coinbase to stake with it is very, very minimal. Entities doing one step further and essentially accessing DeFi is a little bit more complicated, but that's essentially why asset issuers like Van Eck in the States, who have filed an S1, which is basically like a request for the SEC to review their product, are choosing assets like stETH to create the package around. And what using stETH in lieu of native staking essentially allows these asset issuers to do is to create what I believe is a superior product. And it's a superior product because it allows for a larger percentage of the underlying assets of the AUM of the product to be staked and gathering rewards. And it also allows for the redemption activities to be kind of like dual faceted. So you can both unstake to meet redemptions if you want to, or you can essentially use the liquidity that stETH has on the market, which is unparalleled and probably like across multiple networks, to meet redemptions in kind, meaning that a user maybe can just like withdraw their stETH if they want to, and still benefit from staking, as opposed to having to go through the withdrawal period in Ethereum, which is dynamic and can be very, very long. So as we see now, it's up to 40 days, for example, to withdraw your Ether. And what this means for natively staked products is that essentially the share of ETH that is unstaked in the product compared to the share of ETH that is staked needs to increase, which means that the total rewards or APY on the product decreases together with that. The second aspect here is that looking at where the market will be like a year or 2 years from now. So when we look at DATs, essentially what they want to do is perform like with their assets as best as they can. So the first frontier is like holding the assets, and if they do well and appreciate, then the DAT does well. The second frontier is then staking these assets, and the third frontier is using these assets in DeFi. Amongst liquid staking tokens, I think stETH is the only one that's really usable at any size that matters in DeFi. It has the largest amount of like utility, the largest amount of integrations, the largest amount of liquidity if you need to redeem or shift your positions around, and the largest assortment of products that it basically slots into. So when we think about where a lot of these institutional players will be like 2 years from now, and we think about like what kind of DeFi Lego they need in order to chase those yields, I think stETH is basically like a quintessential ingredient of this.
Awesome. Super answer. Okay, next up, I think this could probably go to Vasily. So how do you expect that Earn success will be measured in 2026? Is it going to be on the level of TVL, margin, DAO revenue, or just aggregate market adoption?
So we are yet to set up the OKRs and KPIs in Lido Labs for that. So this is not a final answer, essentially. What I'm thinking currently is to have a pair of metrics that would measure success. And one of them should be DAO revenue, essentially. And the other should have to do with and it's maybe more than pair with like we don't want to pay like insane costs for this revenue, and we also want to have a decent quality, so like low risk and decent APR. So like I think this is going to be the like 4 key metrics, where the one that's driving growth is Lido revenue, and what is setting up the sanitary condition for that is costs to make it happen and quality.
Thanks. Okay, and then I think one last question to close us out, and anybody here can take that. So when is Buyback going live?
So if the current proposal is voted in, Q1 2026 should be the date when it's live. It's not a given that what is currently in the proposal is going to live because some people, for example, like which we already seen like on Twitter on the forum, want different things for LDO value accrual, and we have yet to hear from them. So if you have a strong opinion about how it should be done, please go on the forum and state it.
Okay, I think without further ado, that wraps us up from the Q&A. So yeah, thank you all, and thank you to the whole audience for all of your questions. These were great. They covered a really wide range of imminent sort of open questions for the protocol and its products. And thank you to the speakers. There were some exceptional, comprehensive, and legendary answers. So, and yeah, just before we sign off, if you scan the QR code just up here in the top right, you can join the buyback proposal in the forum. So we encourage everyone to share your thoughts, ask questions, and get involved in sort of building this public protocol together. Next, in the bottom right-hand corner, let's meet in Argentina. So Lido contributors are heading to Buenos Aires for DevConnect next week. There will be an event called Lido Day, which is a full day on the future of Ethereum staking. And there we go in a little bit more deeply to strategy updates, product demos, and look at new tools for builders using ST vaults. So this will also contain candid discussions about core, CSM's first year, and what's next for Lido V3. So again, 2 great things to scan here. We'll keep it up for a little bit longer. And finally, just please like, share and help spread the word. I think it helps more people stay connected with the Lido DAO for you to repost this video after you watch it. If it's been helpful for you, again, please share it on with a quote retweet. So thank you all.